Breaking news here on Martyn Lucas Investor. Intel, INTC, big news here tonight. In the last few minutes, the stock has shot up. It's up 5% after, I beg your pardon. It's up 5% today, but actually we started the day, we were a few minutes ago, nearly 5% down. It's like a 10% swing. Why? What's going on? This news has only broken a few minutes ago. This is brand new news, just out. Let me share with you what's going on with Intel today. Tap the like button, consider subscribing, and let's go over to the wires and see what we got here. Let's have a look. We can see Intel gains after report Qualcomm has approached about a takeover. A takeover, Qualcomm. We like Qualcomm. We've not been that bothered about Intel. This is interesting. Intel suffering and now Qualcomm want to take over. Let's read it. Let's go down here and see what's going on. Intel rose 6%, and that's after hours, but the swing is 10%, amid a report that Qualcomm has approached about a takeover. Qualcomm fell 2.9%. So the S&P doesn't really benefit from this. One stock goes up, one stock goes down, and so on and so forth. But there you go. Qualcomm fell. The reason why Qualcomm would fall, of course, because it means they're going to spend money, whereas Intel are getting money. It's good for Intel, necessarily, potentially. It's not great for Qualcomm initially, of course, but then this presents opportunity because they're buying it because it's a good thing. They're not buying it for a bad reason. So Qualcomm will come back up again. So you might like to see this as an opportunity to buy Qualcomm. Anyway, Qualcomm approached Intel in recent days, according to a Wall Street Journal report on Friday, which is just out, which cited people familiar with the matter. Intel has a market cap of 90 billion, while Qualcomm is valued at 194 billion, obviously. What else have we got? More on Intel. That's just literally happened. That's all there is at the moment. Let's have a look at what this says here. Intel, a perfect example of why cheap doesn't always mean buy. Let's have a quick listen to this. This is a review here. Intel's transformation into a foundry business has led to declining core business revenues and profitability with no immediate catalyst for stock growth. Government funding will not solve the company's problems. INTC's future profitability remains uncertain and the stock continues to underperform the broader market. The stock appears extremely cheap, trading below book value, but lacks the necessary catalyst to justify an investment. I maintain a hold rating on Intel. Of course, that's going to change now, though, if Qualcomm takes over. Now, this could be a very much buy the rumor, sell the news. Look at that. Let's have a look at it rise now. That's a 17%. No, it's not. It's a 13% swing now. I beg your pardon. One hell of a move there. What's your thoughts in the chat? I tell you what, as we're looking at that, if we get any news from Wall Street and CNBC, I'll bring it to you. But as I'm watching the wires and seeing what's going on, let me type in Intel. INTC. I'm making this video live. This will be a video later on being made during a live show. Let's have a look here. Right. We could see some interesting news here. $31. So it's 30% undervalued right now. So that, like we were saying, it's below book price. 47% in best case, and we probably are in a best case scenario. The stock is rallying now. People, it's flying. By the way, look at this. We'll come back to the information in a second. Breaking news. This could be interesting. Let me have a quick look. Here it is. Here's the news.
The somewhat precarious position that Intel has found itself in over the past few years and how it's tried to deal with this AI revolution and wanting to be a critical part of it. What do you think about this report you've heard?
Yeah, Scott, it is a tough spot that Intel's in. And I have reached out to Qualcomm. I haven't heard back. Did just get off the phone a few minutes ago with Patrick Moorhead, who's an analyst who I actually met when he was working for AMD. So he's up on chips and other things as well. Look, don't know whether or not this report pans out. But when I first saw the headline or heard about the headline, my reaction was, well, this is one of the few deals that could actually be allowed to happen because Qualcomm not only has a market cap right now that is about roughly twice where Intel's is. It's also a big U.S. Chip industry player. Now, Qualcomm does not do chip manufacturing. Intel's manufacturing business is the big spot where it's having the difficulty and where it's pouring billions of dollars in. And then, of course, the U.S. government,
Foundry,
through the CHIPS Act, has begun supporting that. They haven't delivered the money yet, but they have promised it. Qualcomm and Intel do compete in PC chips, but of course, Intel's a lot bigger in that space than Qualcomm is. Intel has a lot of business in data center. It's losing share there, but it's there. Qualcomm doesn't. So there's minimal overlap, but a lot of this, as Pat Moorhead was just saying to me on the phone, would depend from a regulatory perspective on how regulators define the market. But these are both domestic companies. They are champions in their own ways. Qualcomm initially on mobile technology, now expanding into automotive, IoT, and PCs. Intel squarely in PCs and somewhat data center, having trouble with that business and the manufacturing business. Both are focused on AI being the future, but doing that from slightly different perspectives. Again, Qualcomm more on mobile and industrial, and Intel really trying with its Gaudi chips to build up a competitor to NVIDIA. Also doing some of that on the PC side. So I think, that's why you see Intel right now up 7.5% or so on just this possibility. But there are very few companies, Scott, who I think would both have the incentive and the means, right, from a market cap or cash perspective, to talk to Intel about this.
It was just this week, if I recall, I think at the beginning of the week, where Intel made the announcement of turning its foundry business, John, into a subsidiary and then taking outside funding. I mean, I guess that, you could tell me better, underscores how Pat Gelsinger and the management
quickly
team
it moves,
at
folks.
Intel
Second by second.
are trying to be transformative for their own business as we move into the future here.
It does, and it also underscores the amount of pressure that Pat Gelsinger and Intel's board are under. Look, they were right about the demand for chips into the future and the need for domestic manufacturing. I think what they didn't see coming is the enormous success of NVIDIA and the shift of business away from CPUs, where Intel specializes, toward GPUs, where NVIDIA specializes. So as they're spending these tens of billions of dollars to stand up manufacturing capability to satisfy, that demand for domestic chips, for AI chips, their revenue is suffering on the other side at the same time. Pat Gelsinger also here on CNBC exclusively at the beginning of this week said they're trying to keep design and manufacturing together, even though they're structuring from a governance perspective the foundry business as a subsidiary within Intel. And I can tell you, a couple years ago when I held a gathering of some CEOs who I know pretty well, both Cristiano Amon, the CEO of Qualcomm, and Pat Gelsinger, the CEO of Intel, flew in, and really they wanted to talk to each other on the side during that gathering. That's part of the reason why they were there. And Qualcomm is one of the big potential customers for Foundry, right? So they have a need to diversify their sourcing in chips, whether that is part of what would be attractive about Intel on top of the other IP Intel has, we don't know, Scott. At least I don't know.
Yeah, well, maybe they've been speaking, according to these reports, once again. John, I appreciate it. Thank you. You catch John, of course.
There we go. That's great. So I like this. Let me have a quick look at the business. We'll do some analysis quickly on it. We are down 0.2 on revenue, 55.1 billion. No expected gains there. Operating income is negative 29%. Net income is down 76%. Financing cash flow is up 235%. Investing cash flow is up 35%. That's a negative. Operating cash flow is down 4%. Let's break down the balance sheet. 206 billion in assets. 91 billion in liabilities. Cash, we've got 29 billion in cash, so that's a good ratio, and the liabilities to assets isn't too bad either. Let's look at the debt. Long-term debt, 48 billion. So you can see it's in a lot of trouble. Long-term debt is 53% of its liabilities. That's how it's been able to the potential be taken over. Let's look at the gross margins. The gross margins have been falling down as they've been spending money on the foundry, of course. 1% margin, that's gone down. They're spending money, so the operating margins have gone. Net margins have gone. FCF margin, negative 23. Obviously, Qualcomm can see an advantage here moving forward, so that's good. ROCE is 0, 22% ROIC, a big expected rise there. Look at that, boom. ROA 1%, ROE. Let's have a look at this. You can see the profitability of the company is 46. It's nowhere near where it needs to be, and long-term solvency is 43. So it's not going to go bankrupt tomorrow, nothing like that, but it's not where it used to be. So Qualcomm see an opportunity here to take over. Worst case scenario, 23% downside. Okay, what about the upside now? 23% upside still, going to $27, or probably are more in between these two. Best case scenario, $61 now. That's 177% upside. Let's have a look at the short position, 2.2. So don't expect a short squeeze. That's a shame. If there had been loads of short interest, there could have been a short squeeze here. But unfortunately, there is no short squeeze coming. So don't get excited about that potential. Wow, hang on a minute. Look at this. Insiders, buy. Look at that, flat out. That's interesting. Look at that. Insiders are buying the stock over the last 12 months. Hang on, though. That's nothing. $251,000 of stock. That's that $1,000 worth of stock. Absolutely nothing at all. And it's the same. Look, 251, 249, 249. What that is automated buying of one person. Don't be bothered about that. So don't look at that and go, great. It looks like it's great at first. And then you zoom in and go, no, that's nothing. That's just standard stuff. So don't get too carried away about that. That's yesterday's news. We don't need to cover that. Let's go back to the stock. So there we go. Some breaking news. Thank you very much, Robbie Cooper, one of my members from the Investor Channel, just alerted me about that. So I was able to bring that to you. So great stuff. Thank you. And if you click above my head for all the links down below in the description, over here and over here, I'll put more things in the series. So that was great news. Is that a buy for you right now? Well, it probably was a buy before the pop. Is it? Could it be buy the rumor, sell the news? We shall see. We're going to keep our eye on it all. But anyway, until next time, as always, take care of yourselves and each other.